All right, welcome back to Halftime Report. Let's get to our calls of the day. Deutsche Bank adding Uber and Adobe to its fresh money list. Josh, you're up first. You own Uber.
The analyst price target is 95. My mental target that I've been saying is over 100. I just want to point out the most important point the analyst made. This is the best-in-class market leader across several categories with large TAMs, growing adjacencies, high-margin new revenue streams, and a growing membership base. We are only getting a glimpse of the profit potential here of the platform, and a really good demonstration of that. They have this thing called Uber One. This is like a subscription program. Membership has grown since Q4 2021, 3x. They now have 19 million Uber One members, and that now accounts for 30% of total gross bookings across the platform. That's up from 17% 2 years ago. So the amount of people who are upgrading to Uber One is significant because they spend more money and use more of the platforms. The other thing is converting existing users to cross-platform. So getting the Uber Eats lazy people to actually go out and do something via Uber Rides and vice versa. That's game, set, match, point, because it's much more efficient than paid channels, advertising, to try to get new users. So what they're doing is working. I think the company is going to surprise to the upside as far as the eye can see, maybe not in every quarter, but the growth of the business and the increase in profitability is what I am focused on here as a long-term investor.
You know, Josh, I want to ask you and Joe about this. You both own Uber. Concerned at all about the growing opposition to classifying drivers as gig workers? Massachusetts, the latest state to push back on that. In that state, minimum wage for drivers, $32.50 an hour. Oh, Josh, I'm sorry.
Oh, this is 15 years now we're talking about this.
Yeah.
So I think what happened in the state of California is significant. The drivers, while they of course want to be paid more, do not want to be classified as employees, do not want to punch a clock or be beholden to the company. The whole benefit of driving for Uber is that flexibility. They don't want to lose it. So the happy medium on a state-by-state basis will be found. And if you have been shorting Uber on regulatory concerns, you have lost. It has been the wrong emphasis. Ultimately, consumers are showing a preference for using these platforms, and as a result, drivers want to be there. And I don't see that changing.
All right, Joe.
The story about Uber for the last several quarters has been profitability. On May 8th, stock reported, and everyone called into question, has this company lost the ability to show the profitability? The stock wallowed in the low 60s for a multi-week period and has now quickly recovered. This stock will regain profitability once again. Management has shown that they have the ability to do so. Josh has, wonderfully described the environment and the opportunities as it relates to the total addressable market. No, I am not concerned about the concerns that you might have surrounding the workers. And I'll say this, if Josh has a mental target of $100, I think Josh is underselling it just as he does sometimes.
Really?
My mental target is above there. This stock for the next several years is a core holding.
All right, Uber shares down 1% right now, however. SLB and Coterra, both named top picks at UBS. Steph, you own SLB.
I own SLB. I recently added to it. It has been a dog this year, unfortunately. It's down about 15%. But this is the #1 player in oil field services. #1. And it's trading at 12 times earnings. And they just actually raised their EBITDA guidance. They're going to grow north of 20%. So we were talking about earnings before being 8 to 10% for the overall S&P 500. These guys are going to put up 20%, 25% margins as well. So to me, I like this story. It is a hidden technology play as well because digital is going to get to $3 billion in top line in the next 2 years. So I'm a buyer of this one and been frustrated, though, but I hope that we can see a snapback.
All right, we're going to move on. We have RTX now, named the top pick at TD Cowen. Joe, you own it in the aerospace ETF, ITA.
You didn't laugh before when I said Josh was underselling it. I mean, I was joking around with it.
No, of course,
okay.
Yeah.
All right. So I think defense is something that investors have to have an allocation towards right now. Clearly, the world is in a much different place. If you think about the last 20 years, you could define it as a more peaceful period. We're now seeing geopolitical tensions rising and the importance of having exposure to something like the ITA, which is the ETF that gives you the exposure to the defense industry overall. overall is incredibly important. I also think adding upon that, we know how critical cybersecurity is, and a lot of these companies are now participating in cybersecurity as well.
All right.